There we go. Live. Ooh, wow, look at this. Nice. All good to go. All right, who's in the house tonight? Tonight. Okay, guitar guy. Okay, lightly salted, Andes, USA, and whatever. My forever, Duat Rebello. Okay, the locksmith, blurry face, I Tyson, user TP, BBC, Cancel Farms, Hairstone, XYZ, Steve, Spick, 17 wins using your strategy. Dude, that's awesome. 17 wins. Nice going. All right. Post check. What's going on? Cosa Nostra's in the house. Woohoo! Cotton Express. What's going on? All right. Who do we have over here? We have Tima. Smabrut. Okay. Tony. What's happening, Tony? Will. All right. Crystal. Anthony. All right. Vanessa. You're bad. Oh, I'm sorry, Vanessa. Okay. Steve. I was getting worried. Great to see you. Good evening. Well, I had a little bit of issue with the new computer, so I had to get Jacob on the phone to get it all squared away, and we're working just great. Lovely. They really enjoy your powerful content. Okay, thank you. How am I doing? Deidre, I'm doing wonderful. Thank you kindly. Yesy, Andy, and Andre? Okay. Good evening. Mike, how's it going there, Mr. Mike? Anika, okay. Will, Viz, Christo. What's happening, Christo? All right, so said hi to everybody. I think we're all good to go. That's running. Okay, everything's running. Army Polito. Okay, good evening. Who do we have down here? Steve, okay. Carmen Francis Chino. Good evening. Cotton Express, you said you wouldn't do it if under 20 years, contenders are under 20. Dividend contenders are 10 to 24 years. 10 to 24. Okay? I'm spreading your content to every one of all of my friends. Thank you, Christo. Aaron, how you doing? Ooh, Aaron wants to take a look at Wynn Resorts. D-Man, I got smoked on spy calls today, only because I got greedy. I need to work on my discipline. Sorry about that, D-Man. I don't buy calls. I don't do buy calls, and I don't even do the spy. SPY is not consistently profitable, but we talked about that before, and I believe you were here for that. So now, Oscar's house. Woohoo! Matt, mindset and markets. Okay, thank you there, Matt. Zen, how you doing? All right, seems like everybody's here. Ooh, Oscar, thank you for that. Mushroom Impotent. Okay. SWD5666, Lays. We'll take a look at that. CJ Mason, you do know that Uber is not 10 years old. I don't even think it's 5 years old, is it? But does Uber have dividends? I don't know, let's check it out. Uber. Okay, UBER. We're going to Yahoo Finance. See, you need a financial website. Okay, now I'm not trying to sell you anything. I'm just saying Yahoo Finance is a free financial website. So we're going to take a look at Uber, and does Uber consistently increase their profits every single year? C. Mason, no dividends. What's your thoughts? EBITDA great. Okay, see, I have a problem with that, Mason. The only problem I have with it, Mason, is dividend stocks have a tendency to be predictable and consistent, meaning they do the same things over and over and over again. Enza's in the house. Enza, how you doing? So if it doesn't have a dividend, how are we supposed to track what it does? Because being able to see how the stock moves predictably allows us to jump in and jump out at the right time. Because timing is very, very important. Because we take a look at the charts, and the charts go up, the charts go down, they go up and they go down. So how do we know when to even look? That's why the dividends are important. Now, the dividends are important for two things. One, it tells us when to start looking, for when stock moves, because they usually move predictably. And two, it tells us, is the company consistently profitable? Because if a dividend keeps increasing, Enbridge is going to be no. Big brain, dude, you ask me every time you show up. And every time you show up, I say no to Enbridge. I got to admit, you got some good persistence. But you keep asking me about Enbridge, and I'm going to keep saying no. No dividends, no thank you. Okay? But I appreciate you. SoFi, Loops. SoFi doesn't have any dividends either. You must be hanging out with Big Brain. Army Polito. Okay. So hopefully that makes sense. Okay, so SWD wants to take a look at LACE. I have no idea what LACE is, so let's take a look at it. LASE. Interesting. Let's take a gander. Are you ready? Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down. I'm going to say no because this thing's below $1. Why are we looking at a stock that's below $1? If it's below $1, how can it possibly have 20 years of profits? Jeremiah, how are you? Uh-oh. All right, hold on. All right, thank you there, Jeremiah. Enza, thank you there, Enza. Do you reinvest your dividends to build stock volume? No. The dividends, I don't even collect the dividends. The profits that I make on a weekly basis are through stock option premiums. It's not the dividends. But I do spend that money to pay my bills. That's what I'm looking for. I'm looking for bill paying money. Mason, what about reinvesting FCF and buy back shares before then paying out dividend? I own 1,000 shares. Okay, Mason, I'm not 100% sure you own 1,000 shares of what? What do we got, Mason? All right, no dividends, but great EBITDA. Okay. Uber, yeah. All right, hold on. Let's take a look at Uber, all right? He asked, so let's take a look. All right, what's going on with Uber? Uber. 72.77. Okay. No dividends. Okay, so no to the dividend part. Sit tight, you guys. I'll get to those questions in a minute. There's no yield here. How are we supposed to figure out what kind of profit we're coming up with? We're going to take a look at the statistics. The statistics are going to tell us what's going on with that company. Okay, so here we go. 127, 152, 194, 203, 169, 145. It looks like it's dropping its market share. Okay, the market share went up right until the third quarter of last year. Now the fourth quarter, it was less, and the current quarter, this quarter, it's even less. So it looks like it's dropping. Hold on, Mason. Let's keep on going. Okay, profit margin, 20%, operating margin, lovely, return on assets, return on equity, revenue per share, $25 revenue per share. Earnings per share, 488. Quarterly earnings growth year over year. Okay, are you seeing this? Quarterly earnings growth, where did it go? Right here. Earnings growth year over year, negative 95%. The earnings are actually decreasing 95%. See it right there? Quarterly earnings growth, negative 95%. That's not a good thing. Let's keep on going down. Book value, 13 bucks. Okay, I'm still going to say no. You know, you like the numbers, fine. They don't look that glamorous, and it has no dividends. My opinion is different because I'm looking for something different. I'm not looking for stocks that have potential to grow in the future. Mason, I'm only looking for stocks that are actually going to pay me every single week because I'm looking for weekly cash flow. I'm trying to replace the income so that I don't have to go back to work. I think I'm doing society a favor. Okay, I've worked for 5 decades. I'm going to step back and say, hey, younger guys, you come in and do the work. Because I can't do the same work that I used to be able to do in my 20s and 30s. It's just a fact of life. The older you get, you know, you get to a point, and then it's all downhill. All right, I hate to admit that it's downhill, but I am 62. It is what it is. There's no sense arguing with it. John, is not a stop loss order a good idea if your long position goes against you? Now, John, I can't tell you what to do, John. Now, why I'm saying that is I never, ever, 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 ever use a stop loss order. And I see why people do it, because it kind of makes sense. But for me, it's counterproductive because I got a couple of rules. Rule 1 is never buy something you do not intend to hold on to long term. If you don't understand it and you're not okay with putting your money into it, you shouldn't buy it in the first place. Okay? And if you're going to jump out as soon as it goes down, I hate to be the bearer of bad news, but that's all stocks do. 2 things. They go up and they go down. That's it. There's almost a 100% certainty that when you buy something, it is going to go down. Also, the flip side, 100% certainty, whatever you're going to buy is going to go up. It just depends on where do you jump in. Okay, do you jump in as it's going up or do you jump in as it's going down? Because it's doing one or the other every single day. So I don't do stop losses because if a stop loss is enacted, then I have a loss on my balance sheet at the end of the year. And I refuse to take a loss. See, I think out of 3,500 trades I made last year, I think I had 4 losses. 4 losses out of 3,500 trades. I don't know the exact number. I'm just roughing it. You know, I got 7 different accounts that I take care of. And each one I trade every single week. Okay? So yeah, it's probably about 3,500 orders, but only 4 losses for last year. I'm going to see if I can go this year with 0 losses. I'm going to maybe not. We'll see. Sorry about that, John. The machinist dude, Coca-Cola, you say. Let's take a look. KO, Coca-Cola, hell no. I don't buy anything at the high of the year. It just doesn't make sense to me. Okay, look at it. Okay, we were down here at 60, 67. She shoots up to a little over 80. So 67 to 80 is 30 bucks. No, 13 bucks. So $13 on a $66 stock is right about 20%. So it jumps up 20%, and you think it's going to keep going? Most likely not. Why is it hard for people to get the concept? Mike, I really don't know. You know, because some people are stubborn. They don't want to admit when they're wrong. But they don't realize by being wrong, you learn. You only learn from making mistakes. If you do the same thing over and over and over again, you're not really learning anything. You got to fall flat in your butt or flat in your face, get yourself up, dust yourself off, and learn from what you just did. Okay? That's just my opinion. What the hell do I know? Mike, Florida, USA. I'm kind of curious. Is there a Florida somewhere else? Anyway, PH. Is that Parker Hannafin? PH? It is Parker Hannafin. Hell no. Two reasons, Mike. Reason number one, I don't buy anything at the high of the year. Actually, we got three reasons. Okay, number one, I don't buy anything at the high of the year. Number two, $997 per share. Yeah, no thank you. And number three, I don't do monthlies. February, March, May, August, November, those are months of the year. Weekly options only. Rule 4, weekly options only. But thank you for chiming in, Mike. This is the first time you've chimed in. Thank you. All right. Henry. Thank you, Mike. Yeah, Uber is not 20 years old, and Uber doesn't even have any dividends. Henry, did we look at ADP? Not yet. Not yet. ADP. Now, ADP is on my list. Look at this. This looks awesome. Okay? You know why it looks awesome? Because you cannot buy any lower than the low of the year. You make your money by buying low, selling high. Buying low, selling high. You've heard it all over again. You want to make money in the stock market? Buy low, sell high. You can't get any lower than the low of the year. The high, the low, where was it? Where is it? Look at this. Down, up, down, up, down, up. It's right there. Let's zoom in. But before we zoom in, let's take a look at the numbers. Because remember rule number 5? Make sure all the numbers work. Let's check it out. The big number, 217.21. 217.21. 217.21. I got one more. 217.21. That's the current price. So if I'm buying it at 217.21, what is the closest strike price? They're right here. 217.50. It's going for 180. That's for this week, which we had 2 days left. So we're not going to get 1% with only 2 days left. So we got to look at next week. Next week, 9 days. Well, 9 days could work. So let's get rid of this. Let's go next week. Now, what is the 217.50 going for? It's going for 370. Come on, you know 370 is more than 1%. Hey, 9. No shit. Oh, the jit. Okay, thank you there, 9. K9, I think it was K9. All right. Trinity, what time frame am I looking at? Trinity, the time frame that I'm looking at is 1 year. I look at the 1 year chart first. I look at the 90-day chart second. I look at the 30-day chart third. And then if I have to, I will take a look at the seasonality chart. Okay, so we're still looking at ADP. We're not quite done with it yet. Mike in Florida, I want to try this for the first time. Help on stocks and consider for Monday. All right, Mike, my suggestion always for people that are new, paper trade. Doesn't cost you anything. Just sign up for whatever website or whatever trading platform. Almost all trading platforms do have a virtual account or a paper trading account. It's kind of like playing Monopoly. Do you remember playing Monopoly? 4 greenhouses, 1 red hotel, round and round, round you go, $200, away we go, you know, that type of thing. All right, so I want to take a look at that. So the last 90 days, the last 3 months, take a look. The high, the low is, look at this, sideways, down, up. It's plain as day right there. Let's zoom in even closer, the last 30 days. Okay, the 30-day high, it drops. Now she's bouncing up. 1, 2, 3. 3 days to the upside. Why didn't we see this yesterday? Why didn't anybody say, hey, James, let's look at ADP? Well, I know why I didn't see it. Because the dividend's not coming up yet. Now, I only buy stocks that have the dividends coming up in the next 2 or 3 weeks. Because stocks have a tendency to go up in price a couple of weeks just before the dividend. And that's why I like dividend stocks, because they are predictable and they make the same movement every 90 days. Think about it. Every 90 days, that stock is going to move based on the dividend. Now, is the dividend increasing or is it decreasing? That's the reason I only like a certain amount of companies. The dividend kings, 5 decades of consistent increased profits. You cannot be a dividend king unless you make more money every single year. Year after year after year. More money, more money, more money, more money. Dividend kings, 5 decades. You know that's 10, 20, 30, 40, 50 years or more. What time frame? We already did that question. All right, Mike, if you want, send me your number. I'll give you a buzz. Oh, by the way, while I got a lot of you here, if you think you're having a conversation with me through a Zoom, through an email, through a chat, through a text message, or through whatever, you're not. I don't do that. If you want to have a conversation with me, either go to the website, book a call, or just leave your phone number in a direct message. Okay? Every single platform that I'm on has a bio which has my information, which means if you want, you can just send me your phone number and I will personally call you. Okay, so we're still on ADP. Let's do the 217s. See what it says. We're going to change this to covered stock, 217.50. There it is. One contract. We're going to actually do this so you can see how it works and does it make sense. Here we go. Buy one covered call, ADP, 27 February. That's not this Friday. That's next Friday. The $217.50. The profit, $424. The investment, the cost of the trade, including commissions and fees, $21,326. Okay, so here's the thing. Remember I said what I'm looking for? Simple, safe, predictable, consistent, 1% per week. Simple, safe, predictable, consistent, 1% per week. Well, the 1% right here, take a look. If I'm investing in this company, I'm investing that much. This is my return. What rate of return is that? I'm looking for 1%. So let's get the calculator. Because you need the calculator, do some quick little math, figure it out. So we got to take the profit, 424. 424. We divide it by the investment. Okay, to get a rate of return, you got to have some skin in the game. You got to put something up. Either your time, either your money, something. Okay, so the investment here is 21,326. Now, that equals a rate of return of 1.98. So it's about 2% for 1 week. Think about it. Okay, going back to elementary school, you ready for this? Because you probably learned this in 3rd grade or 4th grade. Because I know I learned it in 3rd grade. Okay, Mrs. Flagg. I think it was room number 204 because we're on the 2nd floor. Because 1st graders were on the 1st floor, 2nd and 3rd graders were on the 2nd floor. Yeah, so I think it was 203. Room number, Mrs. Flagg, nice lady. Math teacher from 1972. My 2nd grade math teacher, Mrs. Flagg, 1972. Anyway, 1.98%. If 1% per week, 52 weeks, that's 52% or more every year. 2% a week, that's got to be at least 100% by the end of the year. So let's save this one. Let's save it and see how we do. Okay? These are all the other ones we saved. There it is. Oh, I'm running out of space. All right. There she is. ADP. 27 February. That's next Friday. The $217 call option. 424 is the profit. 21,326 is the investment. 1.98. It's almost 2%. But you got to ask yourself that question. Do I like this company? 1.9. Dario wants to take a look at BE. Dario, what is BE? Let's get rid of this. Let's get rid of this. Let's get back to that. Let's get rid of that. And we're going to put BE. I have no idea what BE is. That's never a good thing. Bloom Energy. Okay, let's take a look. Bloom Energy. Dario, let's take a look at this. The high, the low. Where was it? Where is it? Look at this. Up, down, up, down. What's going on right there? We're at 157. Holy cow. The 157s are paying $10. I'm kind of curious if this comes. See, anytime you see big dividend, I say big premiums, usually means they don't have any dividends. All right, hold on. All right, what are we doing? What time frame we're looking at? We did that question. Okay, BE, we're looking at that one. All right, you gotta try that. I want to try that. What time frame we did that question? That question, old as shit. Yep, I got that one. BE. All right, so we're looking at BE. Here we go. Last 30 days, the 18th. Right there. Here's our last 30 days. Okay, up, down, up, down, up, down, up. It's definitely going up. Okay, here's the high right there. Here's the low right here. Almost smack dab in the middle. Smack dab in the middle between the high and the low, and it's heading up. Okay, Monday was higher. Tuesday was higher. That's our 2 days right there. That's my 2 days. I like 2 days to the upside. And then on the third day, I will jump in. So I'm going to be looking at this thing first thing in the morning if it has dividends. Let's find out. Okay. Let's get rid of this. Let's change that to this. The 157.50s right there. One contract. There it is. Here's Johnny. What do we got? Buy one covered call, BE. 27 February. That's next Friday. The 157.50 call option, 1,190 is the investment. That's a big number. 14,000 is the investment. 1,100 is a lot of money for the premium. I don't think this thing's going to have dividends. With a premium that high, you're really going to ask yourself a question. Dario, why is that dividend? Why is that premium so high on this thing? Let's find out. 1190, okay, divided by 14,560. Oh my God, that's going to be a good one. 8%. 8%. Before we go on any further, let's see, does this thing even have any dividends? BE. Let's check this out. There it is, Bloom Energy. Okay, historical data. I want to take a look at the history of the payments that it made. Okay, dividends only, all the dividends, and just as I thought, there are no dividends whatsoever. That's why the premiums are so high, if you like it. Well, let's save it for the gentleman in the green shorts. All right, Dario, 8%. Come on. There it is. There we go, Dario. Dario. All right, buy one covered call, BE, Bloom Energy. 27 February, the 157 call option. 1,190 is the profit. Just for 1 week. The investment, 14,560. All righty. Let's get rid of that. Let's get rid of that. Let's get rid of this. Let's change this back to there. Let's go back to here. All right, what other questions do we have? Okay, loops, SoFi, no dividends. Mike, doing your weekly rule, but not quite 1%, playing it safe, but as of now, I'm up 22,000 for the year. Hey, Mikey G, I'd really love to see what my Christmas present's going to look like this coming year, dude. Nicely done, dude. 22 grand, nice. Yep. Klein, all right, 9 says buy high, sell low. Absolutely. Tupadre, that's an interesting name. All right, what do we got? What do we have? Why is it hard? Okay, you got that one. Thank you there, Mike. Amen, Oracle. ORCL. %. That's crazy. Crazy. Come on. There we go. Okay, when you take a look at Oracle, check this out. The high, the low, where was it? Where is it? Down, up, down, up, down. It's actually coming down at the moment. Last 30 days, up, down, down. It's actually in a downward trend at the moment. Now, don't get me wrong. I love Oracle. I really do. The premiums are great. Okay? But here's the thing. It's in a downturn. Now, don't get me wrong. I love it. I actually have some. Nicholas, how do you scan for these stocks that are the dividend kings? Nicholas, Google. Seriously, Nicholas, Google. Dividend Kings List 2026. It's actually that simple. You go to Google, you can go to Bing, you can use whatever search engine you use, and just do a search. Dividend Kings List 2026. It's actually that easy. And they all pop up. John, can we look at Bud? Bud, Anheuser-Busch. Hell no. Come on, John, you've been here long enough. Why we want to buy something at the high of the year? Makes no sense. Amen. How do you ski? Where did that question? Ben Barracuda. Okay. SLI. Isn't that silver? SL? No, it's not. SLI. Standard Life Invites, whatever. No. Okay, Ben, I don't. Rule number 4, Ben. They got 5 rules, but rule number 4 is weekly options only. February, March, April, July, November. Those are all months of the year. I don't do monthly. It just doesn't work for me. Mike says Bloom Energy has AI infrastructure. Now, I'm not 100% sure whether that's good or bad. Okay, is AI good to be running your energy company, or is it bad? Henry Jason, we already looked at ADP. All right, MT336, how you doing? Randy, what's going on? Mike wants to take a look at Cisco, CSCO. Interesting. Let's take a gander. High, low, where was it? Where is it? Down, up, down, up. That looks interesting. 78.18, the 78's going for 129. That's more than 1%. Let's zoom in, look at the last 30 days. Okay, shoots up, drops down. Now she's going back up. Did you see what happened? There's a big gap right there. Now, for those of you that are on your phones or on your iPads or your tablets or whatever, new iCloud terms and conditions. Yeah, lovely time they want me to read them. That is called a gap down. See, we're here at 76. We dropped down to 73, shot up to 88. That's a nice run. 73 to 88, what is that, 15 bucks? Okay, now she drops with a big gap. I say this all the time, and I don't know if some of you actually recognize seeing it or not. Okay, remember I said this yesterday, and somebody didn't really realize that I was saying it, and they didn't really understand it. I'm going to repeat it. You ready? When a stock goes up, if you don't take your profits, don't be surprised if the market maker takes it away from you. Here's the high. See, it went from 73 to 88. That's $15. $15 on a $73 stock is over 20%. Okay? 20%. You don't take your profit. Look at this. The market maker dropped it, took it away from you. So when it comes to profits, I got three things for you. You ready? Number one, it's not a profit until you take it. Number two, nobody ever went broke taking profits. And then number three, if you don't take your profits, don't be surprised or don't be mad if the market maker takes it away. Gap down is the market maker taking your profits away. However you want to look at it, it's up to you. But stocks do two things and only two things. They go up and they go down. So ask yourself a question. Are you an investor who buys and just holds for decades? Are you a trader who gets in, make a little profit, get out and move on? Now, I'm investing a totally different way, and I really don't know how to call it. Because I'm investing in stocks that I don't mind holding long term. So you could call me a long-term trader. However, if the stock hits my target at any time, I'll sell it. And the reason why I will sell it, because they go up, they go down. They go up, they go down. So well, guess what? As they're going up, I'll take some of that profits. Okay? Once it gets to a certain point, I'll take the profits and jump out. And then I will go to the next stock and do the exact same thing. Now, we check every single week, usually on a Monday. We check to see how many new companies are available to invest in. As of this Monday, 10,934 different companies. They're all doing the exact same thing. They are trying, some of them actually do it and some of them don't, but they're all trying to do the same thing. They're trying to make more money this year than they did last year. And you're probably thinking to yourself, that's the stupidest thing I ever heard. That's exactly why companies are in business. They're in business to make more money this year than they did the previous year. That's it. Provide a good quality, a good quality service, or good quality product, or good quality whatever. But they're all trying to create more profits than they did last year. So if all 10,934 are all headed towards profit, I'm going to jump back and forth to the ones that I like. Because if and when I buy one and it goes the wrong way, at least I'm getting higher and higher and higher profits year after year. Let's keep on going. Yeah. Benjamin Dover says, buy high, sell higher. Okay. I'm going to disagree with you because I don't play that game. I don't like buying a stock where it's never been before. Okay, so if IBM has never, ever, ever been at 150, I don't want to be riding it trying to break into 150. Hate dropping my pen. All right. Are you doing in-the-money covered calls for BE? I'm not doing anything on BE because BE just doesn't fit what I'm looking for. But if I was going to, I would do at the money. There's a huge difference between in the money, at the money, and out of the money. Let me briefly show you. Okay, here's the current price, 157.27. This line right here represents at the money. 157.50, smack dab right there at the money. That's the one that I would sell because it gives me the highest rate of return. Now I could do the 155 for a safer trade. This is giving such large premiums. I could even do the 150 or the 149. Less profits, but higher probability. So there's going to be some kind of a balance. Do you want more profits or do you want more safety? I'm 62, I'm retired. I'm leaning towards safety. I would prefer a safe trade than a profitable one. Any thoughts on TU? Drive, what the heck is TU? TELUS Corporation. Okay, so you're relatively new here because I don't do monthly options. Okay, weekly options only. Drive, rule number 4, weekly, what does it say? Right up there, weekly options only. Drizzle wants to take a look at Microsoft. MSFT. Interesting. Now, I do like Microsoft because they are a company that's increased its profits for more than 25 years. That's a quarter of a century. So, the top, the bottom, where was it? Where is it? Look at this. Down, up, down. We're at 399. We'll look at the 400, 650. That's over 1.5%. Well, let's zoom in. What does it look like? The high, here's your drop. Remember? The gap down has a tendency to fill. So yeah, that baby is going to go back up. Now, we bottomed out here, shot up, pulled back. Now we're trying to go back up again. Now, I'm not going to jump into this thing until I get at least 3 days moving up. We only got one so far. But don't get me wrong, I love Microsoft, I do. Now, ServiceNow, David, what the heck is now? Ooh, nice. Again, same thing I said a little while ago. You cannot get any lower than the low of the year. It's right there, last week. Here's the high, here's the low, here's where it was, here's where it is. Look at it, down, up, 107.81. The 108s are going for 370. That's more than 2% if you like this company. So let's dive in. 30 days ago, what do you think? Down, up, down, up. It is moving up nicely. The 108's paying 370. Well, let's do some. Let's get rid of this. Let's change this to covered stock. The 108's right there. One contract, not 10. I'm pretty sure you guys don't want to see 10. Here we go. You ready? Buy one covered call now. 27 February. 108 call option. 340 is the maximum profit. Remember when I said I want safe, simple, safe, predictable, and consistent? Well, simple comes into the picture of it's a simple trading strategy. The easiest trading strategy is just buying and selling. That's the easiest one. But there's a minor flaw with the easiest strategy. You have to wait for the stock to move. This trade here, I don't have to wait for anything. No, I do have to wait till Friday, but Friday's coming anyway. Whether the stock goes up or down, it doesn't mean anything to me. I know it's weird hearing that from an investor, but let me explain why I don't care if the stock goes up or down. Okay? My major concern is the company profitable consistently? That means every single year for at least 2 decades. That's 10, 20 years. Think about it logically. Stock market's been around for over 400 years. I'm only looking for companies that have been profitable for 20 years. That's 2 decades. Out of the 10,900 different companies, there's only about 300 that fit what I'm looking for. Now, I'm going to give you a little secret. However much money you think I have, I don't. And I could admit with no problem whatsoever, I cannot afford to buy all 300 companies and buy 100, 200, 300 shares of each. I can't do it. There's over 300 different companies. I can't buy, hundreds of shares of everything. So I go back and forth, back and forth, back and forth. Maybe I'll buy IBM this week. Maybe I won't buy IBM again for another 3 to 5 weeks. But it's on my list to keep my eye on it, to watch the movement, to find the opportunity to jump in. Well, to make things easier, I take a look when the dividend is getting ready. Now, the reason for that is because most dividend stocks go up just before the dividend date. And that, to me, is a little helpful to know when to buy. All right. So when I said simple, the simplest strategies is buying and selling. But you don't know, but you don't know where the stock's going to go. And you have to wait for it to move in order to sell for a profit. All right, Mike D wants to know about the market maker. Sit tight, Mike. I'm going to get to that in a minute. Okay, so the simplest is buying and selling. The next simplest is buying and pre-selling. It's called the covered call. You buy the stock first, and then immediately, I'm talking immediately, within 2 or 3 seconds, you sell it through a covered call, which basically is a contract to sell at a certain price by a certain date. So if I do all my buying on Monday and Tuesday, my selling is Friday. It's a weekly option, Monday through Friday. Okay, I grew up in the 60s, 70s, and 80s. The workforce, we went to work first thing in the morning. Okay, that just happened to be 7, 8 o'clock in the morning. And then on Friday, the week would be over and we enjoyed the weekend. And the week ended at 4 or 5 o'clock on a Friday. Well, the stock market's the exact same way. Stock market opens up at 9:30 a.m. Monday morning and it closes 4 p.m. Friday afternoon. Monday through Friday, excluding holidays and weekends. But here's the thing. If I'm jumping in on Monday and I'm getting on Friday, I want to know how much money am I going to make without having to wait for the stock to move. That's why I do a covered call. It's a contract between me and whoever wants to buy it. So if I buy it first thing in the morning at 107.81, the closest strike price, or for me, most logical number to sell it for, 107.81, the closest price is going to be 108. So if I buy it at 107.81, sell it at 108, I'm collecting $340 per contract, and that's costing me 10 grand. Okay, well, the 10 grand, well, that's just temporary because I'm buying a contract. I'm buying 100 shares and I'm selling the contract. I'm buying the ability to have the contract. So whether the stock goes up or down, to me, is irrelevant. If the company's profitable, great. If they have weekly options, double great. That's what I'm looking for. All right, so that being said, I'm looking for companies that are consistently profitable. And then I want to make sure I do the right trade. The trade for me is the covered call. Buy the stock, sell the option. Doesn't matter for me which way the stock goes because I'm okay with owning it. There's a 50-50 chance it's going to go up. And there's a 100% chance it's going to go down because that's what they do. They go up and they go down. Norman, thank you for that. So that being said, let's take a look at this. What's the profit here? 340, the investment 10,000. What numbers are those? Let's take a gander. A gander, 340. We're going to divide it by the investment, 10,460, and that gives me a rate of return of 3.2%. 3.2%. Well, we know 1% a week is 50% per year. We know that 2% a week has got to be at least 100% a year. What's 3.2% every single week? Now, I got to admit, I don't even get 3.2% every week. I average about 1.4% every week, average. So some weeks I don't make that much, and some weeks I make a lot more. But on average, for the past 15 years, it's been 1.4. Anyway, roughly 1.4. Anyway, here we go. So we're going to save this one. Saving now, service now. I never even heard of this company. But remember your rules. Never buy something you don't want to own. Never sell at a loss. Make sure the company is consistently profitable. And rule number 4, weekly options only. Rule number 5, make sure all the numbers work. All right, where are we? Here we are. And there she is. One covered call. Now, NOW, 27 February, this next Friday. Not this Friday, which is 2 days away. Next Friday, which is 9 days away. The 108 call option, 340 is the profit. Now, do you notice this right here? It tells me exactly what my profit's going to be. Tells me exactly what my investment's going to be. All I need to do is just come up with some fancy math, profit divided by investment equals rate of return. 3.2. Okay. Three point two, whatever, 3.2. All right, while we're waiting on that one, let's find another one. What else do we have? Ali, 1% weekly ROI. Dude, you're new here. Sit, chill. Everything will come into view in a little bit. You'll understand. Wow, we got to answer some of these questions. All right, let's take a break for a second and answer some questions. 3.2. Did you see that? 3.2% for 1 week. You were asking how you get 1% a week? Every single trade up there is more than 1%. Alrighty. Enza, thank you for that. Rule Beanit. Okay, Rule Beanit. Blogush. AMC. I'm going to say no to AMC before we even take a look at it. The reason I'm saying no to AMC is the numbers just don't look that good. Sit tight. We'll pull it up and I'll show you. AMC. Now, remember I say make sure the numbers work. Rule number 5. Okay. Blogush. Okay, 1 penny, 0, 0, 0, 0. Yeah. The numbers just don't work for AMC. And it's below $2. Yeah, no, sorry. Raul 86, how you doing? Sam Ron, what is the stock you are talking about? We're looking at AMC at the moment. All right, what do we have over here? What do we have over here? Over here. Okay. All right, where did it be? Oh, wow. Oh, wow, all these questions. I feel bad by not getting to these questions. Carmen, how are you today? Uh-oh. All right, so who do we have here? Steve, I was getting worried. Yep, Carmen, thank you, Steve. All right. Carmen, there you go. Hey, it's Up Down. He's in the house. Bullish on parade. Hey, buddy, glad to see you live. Thank you. Just trade the high yield dividend stocks. Albert, I'm going to disagree. Okay, high yield dividend stocks is not always the right way to go. No, you know what? If it works for you, more power to you. Have fun, enjoy. It just doesn't work for me, and I've been doing this for a while. All righty. Enza, what was the company? What's the company? Christo. With the rule of 72, that means you double your capital every year. Not necessarily so. Because 1% a week, even compounded, only comes to around 64% at the end of the year. Compounded. Simple interest, it's 52. Compounded, it's about 64. Lisa! So is a covered call means you own the stock and you're trying to make money off of your... Makes sense to me. Let me repost. Okay. All right. Thank you. You're welcome. Covered call means you own the stock and you're selling the option to make money off of it. Yeah, exactly. Think of it, Lisa. Think of it as a vending machine or a candy machine, you know? What do we have next? All right, Comcast, CMCSA, CMCSA. Let's try it one more time. CMCSA. All right, now I do like Comcast, but Comcast is not going to be a good play for at least another 2 weeks. Okay, give me a second. I'm going to tell you why after I write it down. CMCSA. All right. Now, who came up with that? Chris. Uh-oh. Chris, are you ready? The high of the year is right around 36. The bottom of the year, 24. And she shoots back up to 33. She goes from 24 to 33. 24 to 33. That's $9. Chris, it just made a $9 move on a $24 stock. That's $9 on a $24 stock. That's over 60%. That's a big jump. Okay? Big jump. Now it's pulling back. Look at the drop. Okay? Shoots up, pulls back. Now, don't get me wrong. I like Comcast. I really do. Sam Ron, last one at 3.2. Oh, that's the one you want to know? Okay, hold on a second. What was that one at 3.2? Now, NOW. Don't ask me. I have no idea who that is, and that's not one of the companies that I invest in because I have no idea who they are. Okay, we already looked at Lace. ENB, SoFi, no. JTM wants to take a look at Hewlett Packard, HPQ. HPQ. Interesting. Hanny, what you do when the underlying stock goes against you and becomes under the strike? Just wait it out and drop your strike price and sell it again. Ratish Singh, is AGNC a good dividend stock? Hold tight for a second. We're looking at Hewlett Packard. JTM 184 wants to take a look at Hewlett Packard. The top, the bottom, look at this, down, up, down. Not quite yet. Hewlett Packard's looking for a bottom. Okay? Down, up, down. Looking for a new bottom. Now, a new bottom on Hewlett Packard is probably going to come next week. So I'm writing it down for next week. Hewlett Packard. Nope, I don't have it written down. Okay, here we go. HPQ. Okay, Hewlett Packard written down for next week. SoFi is a no. A VTI isn't. What the heck is VTI? Oh, Vanguard ETF. Who came up with that one? SWD 566. February, March, June. I don't do monthlies. Weekly options only. Sorry, dude. Utilico, what's happening? Yep, Oscar's house thinking. Henry. Yes, we looked at ADP. Uh-oh, IBKR. Isn't that International Brokers? IBKR. IBKR. Interactive Brokers. Okay. If you like it, fine. What is it? 74 bucks a share? Okay. The top, the bottom, where was it? Where is it? Look at this. Down, up, down, up, down, up. What's going on there? Before we do that, 74.90, the closest strike price to 74.90 is going to be the 75. And it's going for 190. That's like 2.5%. Let's take a look. Okay, last 30 days. What do you think? Up, down, up, down, up. See that? 75, 75, 190. Let's check it out. Does it look profitable? Do you like the company? That should be the big question. Actually, two big. That's not right. Two big questions. Question number one, does it make sense? Question number two, do I like this company enough to put my own money into it and hold on to it regardless if it drops? All right, so 75, let's do this. Let's do that. Let's do this. Let's do the 75 right there. One contract. What does it look like? Here it is. Buy one covered call, IBKR, Interactive Brokers, 27 February, that's next Friday. The $75 call option, well, the stock is at $74.90 right now. So if I buy it at $74.90, I sell it at $75, I walk away with $200, I put up $7,200, and I don't even have to wait. Because I buy the stocks usually on Mondays, and usually Fridays I'm out. Or I decide to roll it into the next week. So Haney, what do you do when the stock goes against you? You hold on to it, change your strike price, keep an eye on it, make sure you don't lose. Ratish, is AGNC a good stock? I don't know. We'll get to that in a minute. So here we go. Let's check it out. Calculator, 207 is the profit when divided by the investment. 7293, grand total of 2.8% for 1 week. Resilient. Thank you for that. That's very nice of you. Resilient. So think about it. 2.8% for 1 week, and do you like the company? It's always going to be the big question, the deciding factor. Okay, number one, does it make sense? That's easy. But number two, do I actually like this company? That should be a huge question. Do I even like this company? Let's keep on going. So I said it was 2.8. Is that right? 2.8. So let's save this one. There we go. All right, let's open up. Where are you, little pig? There it is. Is that it right there? There it is. There it is. One covered call, IBKR. 27 February, the $75 call option. 207 is the profit. 7,300 is the investment. 2.8% for 1 week. You either like it or you don't like it. And I hate to be so simplematic. Is that a good word? Simplematic. It's simple and it's matter-of-factly. No, simple, factly, simple, all right, whatever. Anyway, 2.8%. The app keeps stopping. I should write a letter to the company saying, why does the app keep stopping and resetting? 2.8, no matter which way you look at it. Let's keep on keeping on. Let's keep on keeping on. Got to make the best of a bad situation. Ever since that day when you were wrong. Right here, 2.8. 2.8. Yeehaw! Oh, look at another 2.8 right there. That was, what day was that one? I think that was yesterday. Was that yesterday? I think that was yesterday. No. Those were yesterday. Those were Monday. Monday, Tuesday, Wednesday. Got it. Got it. Good. All right, here we go. Next. So next. Can you please explain why the strategy... Randizzle wants me to explain the strategy one more time. You ready? Here we go. I'm looking to invest for a simple, safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. Pre-qualified dividend stocks, in my humble opinion, is any company that's consistently increased their profits for a consecutive of 2 decades. That's 10 years. I then buy the stock just before the EX date because stocks have a tendency to go up just before the EX date. And as they're going up, I like to jump in, grab 1%, jump in, jump out using a covered call, which is one of the simplest, safest, easiest strategies there are. Looking for a 1% every single week. 1% every single week is over 50% per year. How was that? Was that good? Jen, how are you doing, Jen? Lewis, how are you? Brett. Yes, Brett, very big question. Do you like the company? Never buy something you do not understand or you do not like. Let's sit down and let's look at some of these questions, all right? So, Albert, I'm going to disagree with you. Just because the company has a big, high dividend yield doesn't mean they're consistently profitable. What I'm looking for, Albert, is 2 decades of consistent profits. That means every year it's higher and higher and higher and higher and higher dividends, not the yield. Okay, because the yield's only telling you what you're getting in return of your investment. It doesn't have anything about consistency of profitability whatsoever. Bullish on Parade. Thoughts on TD Bank? No. Sorry, I don't do monthlies. I don't do monthly options. They just don't work. Next. Greenwoods, how are you doing today? This reminds, in the penny stock, no, I don't do penny stocks. What's the catalyst news this Friday? Stephen, you do realize I have no idea what you're talking about. Okay, no, don't get me wrong. I understand the words perfectly. It's just how you have them arranged doesn't make sense to me. What's the catalyst news this Friday? I have no idea what catalyst news is. I always thought a catalyst was something that starts something, usually a chemical reaction. All right, anyway, what if I wanted to collect the premiums? Is that something people do? That's exactly what we're doing, Lisa. We're collecting the premiums. Jay Barnes, new here. What is an ESPN description of your strategy? We just did it a couple of seconds ago. Thoughts on Lantronix? Never even heard of it. Okay, M3 Trades. You actually got to give me one so I can actually put it in. AGNC is a no. Okay, who came up with AGNC? Okay, Ratish. The reason why I'm saying no for AGNC is 0.0000. When I'm buying a stock, it's just the numbers. But what's more important to me is the rate of return I'm getting selling it to someone else. Now, I'm not looking to buy the stock and have it go up. I'm not looking for that. I'm looking for a company that's consistently profitable and going up. I don't know if that made sense or not. But anyway, when I buy it at 11.30, the closest strike price is going to be the 11.50. And that 11.50 strike price is going for 7 cents or $7 per contract. Not quite 1%. So no, if I'm wrong, what am I getting? 0, 0, 0, 0. There's no opportunities there, so it's going to be a no. What do you do? I already did that question. All right. Ted. Okay, so 3M Trades, thoughts on Lantronix. You got to actually give me this ticker symbol because I have no idea who that company is. And Ted, THX, 11% dividend. THX. Okay. Now, don't get me wrong, but there are no options on THX, so that's an automatic no. Of course, you can buy something you don't know or like. Yeah, you could. You could do it anything you want. I'm just telling you what my rules are. My rules are I don't buy anything I don't understand. Okay, user 36197086, Walmart, WMT. Okay, we're going to say no to Walmart this week, but Walmart is on my list. Here's the high. She was at 110, shot up to 134, which is a $24 increase. Jumps up 24 bucks. Now it's dropping. So I'm putting Walmart down 2 weeks from today. I think it's already written down 2 weeks from today. No, it's not. Okay, now it is. WMT, Wally World. Uh-oh, we got some low juice over there. Gonna move some wires around. Yay. All right, what else do we have? Okay. Detroit Targa, GPUS. Now, I'm going to ask you a question. I don't really want to be rude. Okay, what makes you think that I need to be reminded 8 times to see something? Just put it up there once. Okay? Just because you put it up there 8 times doesn't make it any better. Hell no. I'm not even going to acknowledge that one. No dividends? What is it? Below $1? No, thank you. Is it the EX date that goes up? No, the EX date stays the same. Hold on. I've never had that question before, so let's check it out. All right, who came up with that one? BRBPAB94. I don't even know how to pronounce that thing. All right, check this out. This is what's called an EX dividend calendar. And for those of you that are new here and don't know, yeah, this is live on YouTube. Yeah. That's live on YouTube. So just go to YouTube, put in the 10-minute trader, and the screen will pop up. Now, the reason why I live, okay, is so that you can see the numbers. Now, this is an EX dividend date. It measures 4 things, okay, because there's 4 dates to remember when it comes to dividend stocks. Date number 1 is called the announcement date. That's when the spokesperson for the company comes in and say, hey, everybody, my name is James. This is Dividend Stock Talk. This is how much money we made this year, and this is how much you're going to get. You're going to get your dividend. You're going to get all that stuff. It's the announcement date. It's telling you how much they made and how you're going to get yours. That's it. Date number 2. This is the important one. Date number 2 is the EX dividend date. The EX dividend date is the last day the stock trades before the dividend is paid. So if you want to collect the dividend, you got to buy it before these little green dots. All these little green dots represents companies that are paying a dividend. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, the payment date. So the EX date doesn't go up or down. It basically stays the same. It's just a date on the calendar. That's all the EX date is. Thoughts on Eli Lilly. My thoughts on Eli Lilly, it's out of my price range. I don't buy anything for $1,000 a share. Good, I bought it okay, the low today. All right, cool. Royal, my thoughts on KOS, never even heard of it. Let's get out of that. Let's change this. KOS. No. Okay, Royal, I don't do monthly options. Rule number 4 is weekly options only. February, March, April, June, July, January, and no. Weekly options only. Detroit Tiger, I already said no to GPUS. Every little detail, ConocoPhillips. Isn't that COP? It is. No. Don't you pay attention? Don't you look? It's like I say we don't buy anything at the high of the year, so why are you asking me to look at it? All right, so what do we have down here? What's catalyst? We already did that question. Okay, Stephen, how are you doing? All right. Thoughts on FRO? Lars Mars, never heard of FRO. Hell no. Thoughts on SAP? Now that's interesting. Okay, so SAP, the high, the low, where was it? Where is it? Down, up, down, up. 205 to 205 is going for 460. Okay, those premiums are nice. Okay, well, let's keep on looking. Why not take the high premium even with no dividend? Now, Marwan, did I pronounce that right? Marwan 57. Here's the thing. I'm not interested in a high dividend. I'm not interested in the high premium. What I'm interested in is the consistency of profitability. Is the company consistently profitable year after year after year? That's my main concern. Then I'm looking for weekly options. And the only reason why we're looking at dividend stocks is they're predictable. They're consistent. They're boring. They barely move, which makes them safe. Safe, predictable, consistent. I'm only looking for 1% because you're going to get to a point in your life where you say, you know what, I got enough money, I don't need any more. And it's a great position to be in, believe it or not, once you get there. Okay? You say, no, I got enough, thank you. But you can do whatever you want, Marwan. What I'm doing is I'm looking for safety, predictability, and consistency, and then biggest thing of all I'm looking for, preservation of my capital. Okay, I don't work anymore, which means I don't go punch a time clock for someone and get a paycheck at the end of the week. No, I don't. So any trade that I do has to be a safe, predictable trade. I'm not looking for the high premium, and I'm not looking for the dividend. But I do use the dividend to tell me when to start looking. Can we do AWK? Isn't that American Waterworks? Something like that? AWK. American Waterworks. Okay. Okay, interesting. Wait a minute. No. Monthly. I don't do monthlies. Remember rule 4? Brett, I love American Waterworks. I really do. I don't do it in this strategy. I do it in a different strategy.